today it's Finance Friday, and we've been kind of on the topic of fraud. And so I have brought on Cathy Derus, which is so funny because I've known you for like 2 years, and I never had said your last name out loud before. And then I had it wrong in my head for a really long time. So Cathy is a CPA. She owns her own company, Brightwater Accounting, in Chicago area, suburb of Chicago, right?
Yep.
And so we have met, or we've known each other, it's probably about 2 years, I think.
Roughly. I know I was pregnant with Cecilia, and she's already a year, so.
Yeah.
Probably
so,
two.
There you go. Yeah. So we connected through a business networking group for female entrepreneurs. And then we were like, hey, we're both CPAs. We're both kind of doing the same thing. And then we also have this shared history of working at Ernst & Young.
Yeah. And you were a swimmer, right?
Yeah, and swimming. We're so connected. So yeah, we are kind of coming from a really similar background. We both have had experiences and have heard lots of stories of real life fraud stuff happening. So we've been talking about the fraud triangle. If you've seen the blog post, I will post it below later. So if you haven't seen it, you guys can check it out. There's this concept of, well, maybe Cathy, I'm going to let you explain the fraud triangle. Tell us about it.
The fraud triangle, or as Hannah likes to say, the fraud Venn diagram.
I know. I love that image. I just can't get enough of it.
Yeah. Well, I mean, I think they also say, it's the triangle, but also kind of have a stool. There's like 3 sides of the stool, and if you don't have all 3 legs, it's not going to stand up.
Mm-hmm.
And that's just kind of like a physics kind of thing as well. So in order for there to be fraud, or really for it to, something to happen, there has to be pressure. Something has to be going on. The person who's thinking of committing the fraud, maybe they just have a sick family member. They need lots of money to pay for those medical bills. Maybe somebody in their family lost a job, and so they need money for that. But, there is something outside of them that it's leading them to want to, steal some money, do something, commit this fraud. There's this opportunity. We were talking about, giving access to, bank accounts. There's the, not just the access, but like passwords. You have some little window where you can go in and you can do these sorts of things. And then there's also just that rationalization, just saying that you're justified in doing that. Like, oh, they're never gonna notice. They have such a big company. It's, I'll pay it back later, or they owe me, they're not paying me enough. And so this is my own little bonus so that I can get it back. So if you have all 3 of these, there's going to be a higher likelihood that, there's going to be some sort of fraud. And I know we haven't discussed it yet, but collusion, when you have multiple people working together, then it's really hard to kind of get away from that. So
yeah. It's almost impossible to catch unless you have a whistleblower or somebody who inside that collusion starts to have issues. A lot of times, even in an audit situation, that type of stuff won't get caught.
Right.
And I just want to put it out there: audits are not designed to catch fraud.
No.
You're going to put that out there. If somebody thinks they have an audit and therefore they do not have fraud in their business,
no,
that's not the case. They're usually not designed to look at that granular of a level. You could have an employee siphoning off something like, $200 a week or something, but over time it's a lot of money. But in a year, it's not even very much money.
Exactly.
Even a lot more than that in some of these audits.
Right. Yeah. Or even I say for tax prep, when I'm doing, when I send out that client agreement, I say, this engagement is not designed to uncover fraud. It's not an audit. I'm relying on the documents that you give me. Yes, there'll be a little bit of a reasonableness check, but, I want to cover my butt. I have that, in my agreement saying that it's not fraud. I'm not looking for fraud here. Yeah,
because that's what happens when something is uncovered. They'll go back to the CPA and they'll be like, you should have caught this. Or if you're an auditor, you guys should have caught this. Yeah. And actually, did you end up watching that All the Queen's Horses movie?
No, not yet.
Okay, watch it sometime, because so this woman was working in a federal government for a city, not even a big city, a little city. She had been there for 20 years or something. Rita Cromwell. Crundwell or something like that. She stole $53 million from the city over time. And you would think like, yeah, that would have been caught. The auditors should have caught that. But that's exactly what they did. They went back and pointed to the auditors and said, like, why didn't you guys catch this? You know, there were a lot of like finger pointing in that situation, but you know, it's a step. Knowing that you have an audit is like a good thing. It maybe might prevent somebody feeling like they could get away from it, but it's definitely not going to always catch something.
Right. And that's the other thing. It's like, it's an after the fact thing. Like, you really want to kind of prevent this from happening, you know, so that you don't have to go through and deal with, you know, all the fees and the hassle of going through an audit, or, you know, an examination, like looking for fraud and trying to, you know, clean everything up. Like, create an environment in your business where people act responsibly. And you know, they're not trying to screw you over, almost.
Yeah.
That's a better word.
In a small business, we create a lot of trust, and we want to be like, we're trying to do the best that we can, and we assume that people working for us are also trying to, you know, have the same values and things like that. So it's definitely there's you don't want to like hire everybody in thinking that they're going to screw you over. But like you said, if you develop that environment of just, hey, yeah, like we're all, there are checks and balances, so we're all sure that we're doing things the right way, is a much better way to go. So maybe what we can talk about now is like a few examples of some frauds that have happened. And then maybe we can talk about what a small business owner can actually do to help prevent some of these things. Because I think it's important to know how this can happen, because how it can happen, then we can like start to see red flags and say, oh, well, that could happen to me. So you have some examples, right? Or you have an example of something you've witnessed your client.
So, well, there's, you know, kind of going along with, I mean, this has to do with like the business owners, but it also has to do with, you know, just like personal identity theft. You know, that's such a huge thing right now. You know, not having, you know, those password protections, and not, you know, doing different things to kind of keep your, I mean, yes, people over in China, they're going to figure it out. And that happened with a client. I was going through doing her bookkeeping, and, you know, it turns out there were just some charges that didn't look normal. It wasn't, you know, she has a lot of monthly subscriptions. I was like, okay, well, that's normal. You know, but then there were some things that were like hundreds of dollars with like a very strange memo line. I'm like, hey, so client, this doesn't look normal. Like, did you spend something out of the norm, or, you know, is this some sort of like fraudulent charge? And so it turns out that was fraudulent charge. You know, she went back, disputed that with the credit card, which is, you know, another reason why I say use credit cards, so you can go back and dispute different charges if you didn't actually, you know, make them. I do, you know, other things. I do know of a situation where, you know, a family member, they're just a little hard off, and they, you know, were taking money from other family members, because there was, you know, and this is also kind of like a case study. You know, there's this fraud report that has some of these case studies. You know, an older family member, they're relying on other people for care. They're giving trust. You know, maybe their memory's getting, you know, a little worse over time. And so, you know, the caregiver, you know, they've been given a lot of trust, a lot of power, and they go through and they're like, well, I'm just gonna write myself a little extra check. Oh, I have to go grocery shopping for you. I have to go to Target or something. Let's just throw a few extra things in the basket. And they're like, it's fine. You know, it's like, it's my little bonus. You know, I'm doing all this work.
Rationalization. Like, I work really hard in this job. I should be able to get a little bit of extra.
Right.
Yes. So that's like, you know, stealing, just straight up stealing. Like, okay, we're kind of siphoning off some cash from here and there. You know, it can also happen with inventory. So I did an audit one time for a pharmaceutical company. And they had this like triple protected vault of all of their narcotics, you know, because obviously that has a lot of street value, right? So much as like all the employees have been trained, like this one area was like, I was observed, like somebody was right next to me when I was counting. So they didn't even trust me as the auditor coming in to count. But so it was like locked. It had full-time, you know, every camera on all the angles of all the things. It felt like a bank,
Right.
something, you know, like I'm gonna like come in on my like with laser. But it was really interesting to me because they had this like triple protection situation. Like you could never not have two people in the, you know, but you know, I'm sure they've even had issues with that, but they've taken all these steps to like, even just from the outsider say, this is something to be really careful with. Thankfully, like we weren't catching anything at that point in time, but I just saw that as, you know, clearly there is a high risk of having something on your shelf that has very high street value.
Right.
Because who knows, you know, you come into hard times. I mean, isn't that what all Breaking Bad is like? Like, no, he wanted to like change his life or something and just live, or he had cancer. I don't remember what it was, but, you know, you see that, and if you were in a situation that you did need to make money quickly, and you knew you had access to it, and nobody's really counting, like, I really need this, and nobody's going to be hurt. The pharmaceutical companies have enough money. That's the like rationalization, right? So this company like put a lot of safeguards in place so that material can be protected.
Yeah, but if it's like, but if you have that collusion, and if there's those two people that they're in on it together.
Or the person who's doing the video, they're kind of paid off the side, you know, whatever it might be. But, you know, even that can have checks and balances on that thing. But
that's the 11s, right? Or they're stealing the money and they change out the video.
Yeah, exactly. Just take the blank video. So, yeah, I think that was kind of an interesting one, because that's an example of like actual materials being stolen. I've had another client be in a situation where an employee, they paid all their employees in paper checks. And nowadays you have a lot of opportunity to like take a picture on your phone and deposit your check. So your bank already recognizes that you've received a check, but then you still kind of have a paper copy of the check afterwards. So he actually forged, little catch me if you can here, forged basically another check to himself using paper stock that he had already had. And the guy was coming into work every day, just doing his job, doing whatever, and even like denied it when the bookkeeper found it. Because this person had a good bookkeeper in place. Bookkeeper found it, notified her. She looked into it, the business owner. She looked into it, and she, you know, confronted the guy, and the police basically had to come and everything. And it was like he just didn't even like denied that it was even a thing. And it was like, you have some sort of like rationalization here that is outside of whatever, but. Yeah, one of the things that I found like really interesting. So we're going to post the so every year or every couple years, what is the organizations? The certified fraud examiners put out reports that they've found from just doing the research that what they have actually investigated, the fraudulent activities that they've investigated. And they put together this report, and now it's beautiful because they have this like wonderful like analytics and things like that. So it's actually really fun to look at. But one of the things that really came out from this that was surprising to me is that small business owners have more loss from fraud than large businesses. Dollar value wise, like they have about twice as much loss dollar value wise than larger businesses, which to me, I'm like, well, a bigger business is making more money, so the frauds must be bigger. But what do you think is the reason for that?
I mean, I think it gets to, you know, a smaller business, you're starting out, it's just you, and then you bring on one person, you know, maybe it's a contractor, maybe it's a VA, you know, maybe you bring on, you know, employee number 1 or 2, you know, if you're the first employee. But, you bring on somebody else and it's like, oh, I have all this, trust. It's just us. We're building this together. And so you're a little looser maybe. Or maybe, you're bootstrapping things and you're like, it costs money to buy LastPass. It costs money to get an additional email address for this person. It costs money to hire a bookkeeper. I'll just have one person who may not be, an expert in all these different things. They're good enough. Or, I met them at my church. I met them somewhere else. So there's all this trust.
Yeah.
But, then something comes up and, you've mentioned to employee number 2, you're like, oh, I don't look at my bank statements. I'm too busy. Like, I own numbers. I hate numbers.
Can you do that for me next time?
And so then, that person kind of like sees that little opportunity. They're like, oh, I pay the bills. I get the emails. I do this. I do that. I'm reconciling the books and they don't even look at it. Okay, well, $5 there. $25 there, just a little bit. And over time, it kind of like aggregates. And, bigger businesses, they have more people where they can have all the division of responsibility, segregation of duties for the accountants at home. Yes, there is that audit coming in. So, there is kind of they might catch me, so I'm not going to do it if it's somewhere bigger, or you have to kind of like work together more, as opposed to just like you gave the keys to the castle, to one person, and over time they just can take a little bit of money. So that's my thought. I'd love to hear what you think.
Yeah, I absolutely agree. I think it's a combination of like over trust, under protect is probably part of it, because we want to trust the people we work with. Otherwise, we'll keep everything to ourselves and we'll all be solopreneurs and we'll just like work ourselves to death, and that we'll never like scale our businesses or anything.
Right.
But there's the trust aspect, and then just not knowing really what could happen and how to protect from it. So I think those two things, and definitely the larger you get, you could be, your whole job here in the accounting department, your whole job in that situation could be writing checks.
Right.
Like that could be your only job that you do, or maybe just putting in bills for accounts payable and making sure. But if you're doing that, you're not the one who's also in charge of like checking the bank statements, or you're not the one who's doing something else like directly managing cash. You're probably not signing the checks. Right.
Well, adding a vendor, having the vendor, receiving the inventory, the three-way match, having that purchase order coming in. Okay, we're authorized to send, to pay these bills because some of these other, checks and balances are there. Yes, when you get to that, yes, I might be authorized to pay, a $10,000 bill, but if it's getting to like 100,000, you're going to be adding the controller, the CFO, maybe the CEO, to pay for some of these things.
Yeah, absolutely. I've definitely seen the checks that have like 4 signature lines. Okay, everybody knows about this expense, all right?
Good. Yeah.
But in a small, like I actually have a client right now that I'm trying to hire for, and it's really difficult to think about all of the ability we're giving them to do, because the role has to cover lots of different, like the whole accounting process.
Right.
So, you can make that work, but you want to think about, like, you don't want a disassociated business owner with that type of situation.
Yes.
Because if the disassociated business owner is like, oh, somebody else is in charge of all the financials, I don't really need to look at it. That's their job. It's like, well, kind of.
But buck stops with you. Like.
And I read something that said, like, if more business owners had just opened up their bank statement and actually looked at the check images that come along with their bank statement, they would have caught like a large percentage of the small business fraud, because that's the lowest hanging fruit, is like writing yourself a check, an extra check.
Yeah.
Like,
maybe for PayPal
or something. What was that?
Then moving money through PayPal, just send it over.
A little, like, setting up just a little automatic transaction to yourself. So that's one thing with PayPal. we talked about make sure you use the user permissions.
Yeah.
Because if you give your VA or you give your, even your bookkeeper full access to PayPal, that means that they can go in and they can even change the bank account number to go to their account instead of your account. And then they could just leave.
Yeah.
they could leave, go to Europe. I don't know. They could leave somewhere and never come back.
Yeah, just for 1 month, I was, paying some bills for a client, and they didn't create a specific username for me, but they had shared the password and shared everything through LastPass. So I wasn't able to just go in there willy-nilly. They could always revoke that when they were done. But they had that 2-factor authentication. So the client was going to be getting a text saying, somebody's logging into your PayPal account, here's the code. And so, I had to coordinate with the client and say, hey, it's time to pay the bills. You're going to be getting the code. Are you available? Can you send it to me? So she knew when somebody was logging in and seeing whether, we were just sending money willy-nilly, as we were saying.
Yeah. And then, but in that situation too, you were probably putting together financial statements and bringing them so the business owner actually had clarity into what was happening. Because it would be one thing if you're doing all that and then they're still never looking at any financial information.
Right. And then, we were also talking, I was paying certain bills. One of their employees were paying, different ones. And, we were kind of talking about okay, how are we going to know that it's legit? Yes, they're looking at the financials and on a monthly basis, we're expecting these sorts of expenses. They're going to be getting invoices from their vendors. They're going to be getting, so they have, so it's social media management and whatnot. So Facebook ads. So they have VAs or other people working for them. And so they're going to be getting an invoice that, gives you that proof of that work done. There's going to be that ad spending, so there's some of those payments as well. If they hear back from their ultimate clients that say, hey, this work never get done, they're going to start to figure it out hey, I didn't have, Susie Q doing work for me this month. I didn't have a big launch or something. So why am I getting paid or why are you billing me for these certain things? And, just kind of does it all line up?
Yeah, absolutely. I know and even just taking a step of moving things into an accounting system provides so much more structure and ability to keep track of things. I had a client that was on an accounting system but was not using it appropriately. Essentially all their credit card transactions, all their bank information for all their different bank accounts into one GL account. Don't have a heart attack on me, Cathy. But what the point of that is they were never able to do bank reconciliations.
Yeah.
They were never able to.
Yeah.
So the point would be that really, unless the business owner was looking at the bank statements and credit card statements on a regular basis, they would never know if they double counted something, if they accidentally even you could accidentally type in the same bill twice, or with QuickBooks, you could put in a bill and then maybe not match the payment to the expense.
Yep.
There's things that happen, but those all usually get caught in the bank reconciliation process.
Right.
So it was that, yes, I'm using an accounting system, but not using it properly limits the usefulness of it.
Yeah.
So.
And that's kind of what drives me nuts a little bit about QuickBooks Self-Employed. Yes, you can link up your accounts. Yes, there's all these transactions coming in. But if you're getting to be a bigger business where you have employees and you're doing other things, you need to take these things seriously. Go through, reconcile your account, make sure the bank feed isn't double counting, isn't missing something. Because I've had that happen with clients. And I'm hey, this isn't matching. So we have to manually tie it all out and add certain things back in, and those were legitimate expenses and whatnot. But if you're just using a system where you're well, I can just exclude it, it was personal,
Yeah, and then it gets a little messy. a little messy overall. And then you're trying to keep track of like, why are these balances off and like what's going on? And then you just, it could get to a point where you just don't want to look at it because it's all messy. And then it gets back to the same problem again.
Right.
So what do you think? Oh,
yes.
Let's talk about the red flags, the behavioral red flags.
Yes.
Of fraud. So this comes directly from the Certified Fraud Examiner's report. And what they noticed was that these high incident of some behavioral triggers that were happening in lots of the fraud cases.
Right.
And so kind of one of the more recent ones that's been really big has in the past couple of reports has been employees living beyond their means. So you've heard of stories of like a bookkeeper rolling up one day in a $100,000 car.
Right.
And like bookkeeper salaries are usually like $40,000 a year, maybe, maybe 50, depending on where you are. They're not usually they're not usually in a situation where you can afford even a payment on a $100,000 car. Not that we want to be judging people's lifestyles, but if you start to see like continued triggers of that type of thing. So in that movie, the fraud or the Rita Cromwell story, she raised horses and showed them. She was living this extremely lavish lifestyle of like horse ranch owning and showing, and she didn't like look fancy, per se, but like she definitely the horse business is expensive.
It's expensive, right?
And there was just like chatter about like, oh, well, maybe she has a wealthy family, or but nobody ever took that necessarily, because you don't want to pry into people's business, right? Yeah. But it's just something to think about. Also, if you see someone moving towards a lifestyle that's unsustainable, it could be just a red flag. You don't necessarily need to do anything about it, but it might just make you go,
yeah,
actually, I'm locking down my processes a little bit clearer.
Right.
Like a bank statement.
Yeah. Well, and the other thing is, it kind of goes like the living beyond the means. I, think of that as kind of like taking on a lot of debt, and and also just talking about like financial difficulties. Yes, in 2008 there was a big recession. There's some grumblings that the economy is getting a little uneasy again. We don't want to necessarily say that there's going to be a recession or something coming along, but there might be a few more motivations if people aren't hiring as much. Somebody loses their job, there might be a little bit more of an incentive to do something. So you kind of want to watch out.
Yeah, something at home happening, a loved one that needs like a lot of care, like or an elderly parent that needs to all of a sudden come and live home, like just lots of life situations. I mean, a gazillion things can cause the financial difficulties. The other couple things that happen are another kind of red flags would be an unusually close relationship with a vendor or customer, family members.
Right.
Happening with a local government here. There was somebody who was setting their brother up as a vendor and paying, I think it was their brother or their cousin or something. But like they had a legit like business, but it was like there was no reason for those two people to be doing business together. And they siphoned off about $400,000 before it was caught. And when the money goes away, it almost never comes back.
Right.
Because it's almost always been spent. So it's not like somebody has a $400,000 savings account sitting somewhere that they can just be reclaimed. Like there's very little recovery of any of this.
No, it's $500,000 car.
Another like high indicator would be someone who's unwilling to share the financial information or like must control it. And that usually comes along with people not taking vacation.
Yes. Yeah.
I don't know if you've ever experienced this, but some employers will actually make you go away.
Yeah. Well,
take some vacation.
So there's like the mandatory vacation, or if you don't have the mandatory vacation, like I know working in the corporate world, but even, a smaller client, we would rotate Responsibilities. Somebody would be, every quarter we might, you have to reconcile all these accounts, but, not just the bank accounts, but they were like rotating around who was doing it. So, yes, there is the training in case somebody goes on vacation or has an emergency, but it's also so that there's not that monkey business. They're kind of uncovering that. And, when you're rotating things as well, my client was doing that where, employee one does a certain process, they kind of document it, and then the other, and then next quarter or something, you have that person kind of following through the instructions. One, just to see if it makes sense. Can you backfill for those responsibilities? But it is also another little thing where you can see, is something funny going on with, setting up vendors, paying some of those bills.
Yeah.
Inventory, for somebody who has a retail location.
Yeah. And if one person was like, oh, I don't want to train anybody else to do my job. I do it the best.
I love it. It's my favorite.
Are you saying that I'm not doing a good enough job? And then that kind of that defensiveness, or like, I'm getting really frustrated and unwilling to share information. It's a lot of people, like one of the case studies, it was that person was starting to get defensive and like, when she was the one who was doing the fraud, the business owner's wife was trying to get some information about the financials and asking questions. And the person who was committing the fraud was being very like, defiant and not wanting to share information. And it wasn't coming up from a place of, oh, I'm hiding something. It was coming from a place of like, how dare you come in and look here? This is not your business. Why are you coming
here for 20 years?
Are you saying I don't know what I'm doing? And those are the types of things when you create a conflict, sometimes people will back down because there's conflict and, okay, well, I just won't deal with it. That happened with one of these fraud stories where the business owner was actually one of the business owners was one of the ones who was actually perpetrating the fraud. But the character of the person was just very like charismatic and boisterous, and they would kind of push down and push out anybody who spoke up too much and asked too many questions.
Right.
And then they started hiring in people that were more passive, that just wouldn't ask the questions, and started hiring in the people that also had like family money or a spouse that was also working. So they were in a situation where they cared so much about the money. And that went on for a long time. I don't know if you read that one or how.
Yes, I did read that one. Yeah, that's fascinating.
I thought that was really interesting and that was in a situation, so you can have a lower level employee siphoning off money or stealing or committing fraud, but you can also have somebody like a partner or, a principal, however you have it structured, where they could be in leadership. Because, really, if you're a sole business owner, you would just be stealing from yourself. So like, there's not really any point of that. But if you start
tax fraud, maybe you're.
I mean, like, you could definitely do other types of things to like avoid paying the government or whatever. But like, if you're just talking about stealing cash, it's like, it's your cash anyway. So that would not be wise.
You're talking about that. We talked in your blog post, you're talking about the fraud triangle. You say one of the things that, do background checks, make sure, somebody doesn't have this like history. I know when I've applied for jobs, they also had a credit check, am I somebody who has low credit? Am I not responsible? Or, is there some motivation going on there? But then I've also seen a lot of people talk about personality tests. So I could almost see, if you layer that on there, yes, are you hiring somebody who has, a good background? But then, what's their personality type? Are they maybe a little bit more, prone to do some of those things? Like you're talking about somebody who's like a little bit more controlling and, the boisterous and, as opposed to like somebody who's passive, who's not going to fight back. But I don't know. I think those are some other considerations you can think about.
Yeah, and kind of what the role is and really like what the responsibilities could be too. Because this can happen at any level. It could be like your lowest level, like admin staff could be doing this, or you could have, someone in senior management potentially. So like someone in senior management could be maybe like going on business trips or getting reimbursed for business expenses that aren't really true, or if somebody has access to the company credit card and if those receipts are never requested and those receipts are never, and the financials are never really detail reviewed, somebody could just be going off like doing whatever with their company credit card. And it doesn't necessarily like, you know, take a lot to, you know, think, oh, well, I'll just charge this meal to the business.
Right.
Like, technically that's fraud. If it's not for a business reason and you're not trying to repay the company for it, technically you're stealing from the company. But if somebody is, you know, oh, I've worked really hard this week, I deserve a meal. You know?
I know that, you know, just thinking about like expense reimbursements, you know, I was in public accounting, we would work late at night, depending on, you know, the situation. You know, they said that you could, you know, expense a cab back to your house because you're working late and whatnot. And, you know, we're in Chicago, downtown and whatnot, you know, as opposed to taking public transportation. And so people are kind of like, oh, well, you can keep, you know, the taxi driver will give you a receipt. And, you know, maybe there's the receipt that gets like printed out from the machine, but then there's also like the paper receipt where you could like write in the actual amounts. People are like, well, let me get a few of those extra ones so I can submit that as an expense as well.
And these are accountants and CPAs.
Right. So, I mean, there's that opportunity and you're like, I'm exhausted, I've worked so hard. But you know what? If you're paying people appropriately, you know, for the tasks and, you know, make them feel welcome and appreciated, you know, they're going to be a little less likely to do that. There's not as much of that opportunity. You know, I also remember, you know, just expense reimbursements, you know, traveling, you know, mileage. There was somebody, they had their expense report just kind of like questioned. They're like, is this legit? And they're like, they had to pull up like MapQuest, you know, or Google Maps saying like, okay, this is what it was from my house. New client location, you know, 50 some miles away. Yes, I did drive back and forth 5 days a week to there.
Why?
You know, it wasn't, you know, we weren't spending the night there. But it was just looking at like, is this reasonable? Because they're like, people don't usually expense that much. But yes, it was 50 miles each way. So.
Yeah. But that means that the company had some sort of like procedure or trigger in place to say if somebody was trying to get mileage over this, raise a red flag.
Yes.
And I think that those are the types of controls that small businesses don't have.
Right. Yeah. You kind of think about that threshold, that materiality. So maybe it's, you know, if it's under 25, you know, people might be like, I don't have to worry about that so much, but like $25 a month, it adds up, you know. Even $25 a month software subscriptions, you know, depending on, you know, the size of your business, it adds up over time. And if you're not using it, like, cut that expense.
Yeah. So it kind of all like comes down to like, you know, financial review won't necessarily prevent fraud, but it will help catch it if you are looking at things. If you are opening up your bank and pulling the statement and just looking at it and saying, does this make sense? You know, pulling up the credit card from time to time and saying, what are these recurring charges? I have no idea what this is. I'm running this business. I should have an idea of what this dollar amount going out of my account is. And I mean, if people are not quite in a place where they can, you know what to look like at that point, they can hire somebody like us to walk them through. And then even having like a third party, somebody who's not partial, somebody who hasn't been with the company for 20 years, will ask other questions than the people that have always been there. And it might not feel all that comfortable for people sometimes, but bringing in a third party is actually a fantastic way to kind of provide another level of control on top of everything else. So what are some other things small businesses could do? As we're just thinking of like really practical, really small, like we talked about LastPass sharing. I really like a receipt management tool, something that will actually like require employees and people to send in receipts. Financial review, we talked about looking at bank statements. Background checks, we mentioned background checks. What are those other things for prevention?
I think some other things. I mean, one of those like big things is, you know, looking at things on a regular basis. You know, just having that extra person and not just necessarily relying on, the controls. Or not relying on the controls. Have the controls you can rely on, but just, don't always just like rely on this one person.
Yeah. I liked the idea of rotating responsibilities.
Yeah.
You could have kind of a use it or lose it policy on vacation. Like that could be definitely something you could do in a small business. You could have, you also just want to have more of a clear culture, which it takes time to really establish a culture. But if you have a culture of, openness, collaboration, oversight and review and quality, like these types of things, if you really have that embedded into who you are as a company, that's going to trickle down, and it's going to even affect like the type of people that you hire and what kind of characters, like kind of to your like personality test question or thought. But it does kind of trickle down from the small business owner. If the small business owner is really kind of aloof and like, okay, whatever, like you guys do your thing, I'm going to do my thing. Like that's not going to create the environment of let's all be responsible and do what's best for the company. It's going to be like everybody's individual and we all take care of ourselves.
Right. Yeah.
I mean, we could talk forever about this. Sorry, if I look at him like, oh, it's like 45 minutes in. Whoops. Well, I will wrap it up because I feel like, okay, we will put the fraud report in the comments to this video. And I definitely think it would be a good thing for people to scroll through, see like what could be happening in your business that, you could improve upon. We don't want to, distrust our employees, but we want to set them up for success too.
Exactly. Right. Give them, have that budget, set some of that money aside, because it's gonna be less expensive to, buy a LastPass subscription. It's gonna be a lot less hassle to, spend a little bit more money on some of those controls, the background check ahead of time, as opposed to trying to recoup any sort of fraud or any, going through an audit, going through an examination, trying to get that money back. Like if it's gone, it's gone. Like it's gonna be hard to get back.
Then, I mean, that employee too could go to jail. And maybe had they never been in a situation that they like were given the opportunity, they might have never perpetrated it. I'm not going to speak to their character, because if you're going to steal, like it's a character issue to some extent. But also, if you're put in a situation where everything's really open to you,
right? And if you have that like family emergency or something happens,
it's that concept of like, if I put 1 million diamonds on the table and walked away for forever, never said I was going to count them, never do anything, even the most honest people at the end of the day might think, well, nobody's just going to miss one. Just one. So I like that visual, because I feel like almost anybody would be tempted at that point.
Yeah.
If you just gave no guidelines.
Yeah.